Thanks so much for your time. I am Pius Kojo-Baka. Look now at our stories. Inflation for the month of January 2025 declined marginally from 23.8% in December 2024 to 23.5%, and that's according to data from the Ghana Statistical Service. However, food inflation for January went up to 28.3% from 27.8% in December 2024. And food inflation went down to 19.2% in January compared to 20.3% in November 2024. More in this report.
According to the Ghana Statistical Service, inflation for locally produced items declined to 25.7% in January 2025 compared to 26.4% in December 2024. Also, inflation for imported items went up to 18.4% compared to 17.9% in December 2024.
Consumer Price Index for the month of January 2025 stood at 252.6 relative to 204.5. Given these two indices, year-on-year rate of inflation for the month of January 2025 stood at 23.5%. Year-on-year annual rate of inflation for the month of January 2025 stood at 23.5. This indicates a slowdown of 0.3 percentage point, leading to a disinflation for the month of January 2025, with December rate at 23.8%, slowing down by 0.3 percentage point in January 2025, leading to a disinflation with a rate of inflation figure of 23.5% for the month of January 2025. This means that over the one-year period between January 2024 and January 2025, general price levels of goods and services went up by 23.5%. In the month of January 2025, general price levels of goods and services went up by 23.5%. In the month of January 2025, Consumer Price Index, which stood at 252.6 relative to 248.3, indicates that between December 2024 and January 2025, general price levels of goods and services went up by 1.7%, indicating a 0.1 percentage point slowdown for a month-on-month inflation.
Alcoholic beverages, tobacco, and narcotics recorded an inflation of 27.2%. Food and non-alcoholic beverages also recorded 28.3%, while housing, water, electricity, gas, and other foods had 24.6%. Hence, these divisions recorded a higher inflation compared to the national inflation.
We recorded a 9.1 percentage point difference between inflation for food items and inflation for non-food items, with inflation for food items recording 28.3% for the month of January 2025 relative to 19.2% for non-food for the month of January 2025. We have seen an increase in food inflation, increasing from 27.8 to 28.3 between December 2024 and January 2025, indicating a 0.5 percentage point increase for food inflation between December 2024 and January 2025. We've seen a slowdown in non-food inflation. Non-food inflation was 20.3 for the month of December 2024 and slowed down to 19.2% for the month of January 2025. On a month-on-month basis, we recorded a 0.6 percentage point difference between food inflation and non-food inflation, with food inflation recording 2.0% for the month of January 2025 and 1.4% for non-food for the same period, January 2025.
The Upper West region recorded the highest regional inflation of 49.9%. Meanwhile, the Volta region had the lowest regional inflation rate of 18%. James Eshen's report for Joy Business.
All right, so let's interrogate the numbers a bit further. Joining us via Zoom to do that is economist Professor Peter Quartey. He's an economist to speak to us on the subject matter. Thanks so much, sir, for agreeing to speak to us on Business Live. I want to know your initial thoughts about the marginal decline in inflation numbers for the month of January 2025, as we've been told. Non-food as the driver, does it come to you as a surprise?
Not as a surprise, because if we see the movement in the exchange rate, etc. I mean, that certainly informs some of these expenditures. But then food inflation, as you've seen, it's one of the major drivers because of drought, because of our reliance on rain-fed agriculture. And we've seen some limited rainfall in the past couple of months, and therefore that is what is driving the food inflation. But what is more worrying is the fact of food inflation in the regions where you expect food production is their main activity, their mainstay, yet they are recording very high inflation in northern parts of the countries, for instance, and you find inflation about 50% in some of these countries. That is quite worrying. But having said that, I think given that in a post-election year, we see a lot of high rate of inflation recorded, and for the first time, there's a marginal decline in inflation. That it is good, but we have to work on food inflation. We need to move from over-reliance on rain-fed agriculture and do more of irrigated agriculture.
Very well. Well, some are of the view that the hold-up in the policy rate, for example, may have accounted for the marginal decline we are witnessing. Where do you stand on that?
Well, the hold-up of the policy rate was just a recent phenomenon. The data collected for inflation, if you will notice, was collected a bit earlier than the policy rate that was held up much recently. So that cannot. But having said that, I think the relative stability in interest rates and exchange rate goes to confirm my point that usually the first quarter of a post-election year, there is much more turbulence, much more noise in terms of inflation than one would have witnessed.
Well, I know you've mentioned that there is the need for us to, pay critical attention to food inflation, but what practical reasons would you give or propose that we need to take a look at to maintain this trajectory going forward?
I would maintain that we should look at commercial farming, large-scale commercial farming. We shouldn't just be subsidizing fertilizer for small-scale farming alone. We need some of these anchor farmers. You need some of these large-scale commercial farmers who will drive the chain, who will look at the outgrowers and drive them along. If we support them with guaranteed credit, like we've done with GESAL, and expand its coverage, so that large-scale commercial farming, irrigated agriculture is enhanced, and also support the value chain. The support can be in the form of storage, can be in the form of processing, so that you don't have the glut every time we have bumper harvest. These days, we also see some green agriculture moving into greenhouse agriculture, for instance. These are all means by which we can expand our food production.
Let's shift focus to the Bank of Ghana now. We know the new governor has formally begun work today, having talks with the deputy governors and some senior staff. Now, generally, what are your expectations under his leadership?
I think the transition, you see them talking, you see them trying to have a smooth transition, which for me is very critical, very important. By the way, the governor and the first deputy governor were mates in school, so it's the communication and the transition will be good. The second deputy governor is also a mate of ours, so I expect this dialogue, smooth transition, to continue. Dr. Isiama Johnson has been with the bank before. He's been there since
the deputy governor, yeah.
The deputy governor since he completed his master's degree, and so he's quite an experienced guy who knows what it takes and has been there. I believe we'll get the support of the staff and of course, engage in teamwork so that we'll be able to stabilize the exchange rate. There's been some relative stability, but he needs to push that further. There was goal for reserves program and trying to give the BDCs and supplying dollars to the market and all. Some of these interventions can be sustained. And of course, if there are some new ways by which they can help show up the exchange rate, I believe that is good. Then interest rates. Interest rates are relatively high compared to what you find in the sub-region. Bank of Ghana's mandate is to ensure price stability, exchange rate stability, interest rate stability, so that the private sector can borrow and expand credit. And lastly, at the last recent Monetary Policy Committee meeting, it came out clearly that non-performing loans is on the rise. It's around 21.something%. That is not good, because this would certainly translate into the cost. We factored in the cost of loans. So he has to engage the banks, he has to engage the credit reference agencies, he has to engage the relevant authorities to ensure that we reduce the incidence of non-performing loans. Another factor that builds into the cost of credit so that credit will be cheaper and affordable.
Thank you so much, Professor Peter Quartey. I truly appreciate your time speaking to us here on Business Live. Always a delight speaking to you. Let's stay a while longer at the Central Bank because Governor Dr. Johnson Isiama has promised to work with the team of the Bank of Ghana to ensure a smooth transition. Dr. Isiama gave the assurance at a meeting with the two deputy governors of the Bank of Ghana when he formally assumed office today. More from George Yafe.
Speaking at the meeting, Dr. Johnson Isiama noted that he will do everything to ensure that the independence of the Bank of Ghana is assured.
And as I said, I was explaining to my colleagues a while ago, His Excellency the President thinks that we should do this. It's a way of enforcing our independence as a central bank. The public must see us, as working together. It's just another transition, which is normal. The good thing is some of the people here are people we know already. And so the transition, you can be sure, will be smooth.
He also revealed that so far the engagement has been good and wants to show that the transition will be smooth.
You can see how the transition can be. Early this morning, we have held a number of discussions already between ourselves. Some briefing has gone on. And so far, so good. You can be sure that everything will be fine. We are focused on our mandate, and that is what matters. And so you can look forward, to us executing our mandate as we've been doing.
Dr. Johnson Isiama added that it is early days here to talk about policy issues, adding that more deliberations needed to be done before deciding on the way forward. Some industry watchers argue that it should make stabilizing the Ghana cedi against the dollar his major priority now that he has assumed office as governor of the Bank of Ghana.
Nothing policy related. At the appropriate time, we will communicate that. But all I can say is we have a mandate as a central bank. So that is what our mandate remains, nothing changes. A few tweaks here and there, in the light of the challenges we've been having in recent times. But we'll communicate that appropriately.
Now, insurance companies have gone ahead to increase motor insurance tariffs from February 1. This is despite an earlier directive from the National Insurance Commission to freeze the implementation of these tariffs. More in this Business Desk report.
A circular from the Ghana Insurance Association to all the chief executives of insurance firms and brokers directed them to go ahead with this increase from February 1, 2025. The association noted that they are being forced to do this due to the rising cost of doing business as a result of inflation rate hikes and depreciation of the Ghana cedi. They argue that they are going ahead with this increase so that they can continue to stay in business to meet the claim payments of their policyholders. The 10% increase will translate into 48 Ghana cedis per policyholder. That is 4 Ghana cedis per month and 13 pesos per day. They concluded in the circular that it is within the right of insurance companies to charge premiums based on the risk exposure to sustain payments to policyholders.
Remember, you're still watching Business Live. We have more stories for you after this break. Hello, welcome back to Business Live. Key speakers at the Africa Prosperity Dialogue have stressed the need for stronger economic integration and digital transformation within the continent to drive Africa's growth. Speaking at the 2025 Africa Prosperity Dialogue, Vice President Professor J. Nana Opoku-Agyeman described the continent's fragmented markets as a major obstacle to economic growth and called for a unified trade approach. Here is more in this report.
Vice President of Ghana, Professor J. Nana Opoku-Agyeman, has underscored the need for Africa to integrate its fragmented markets to unlock its full economic potential. Speaking at the African Prosperity Dialogue 2025, she emphasized that with a population of 1.4 billion and a GDP of over $3.4 trillion, Africa can create jobs and reduce poverty by breaking trade barriers and fostering a single unified market.
Africa's fragmented markets are a significant barrier to our economic potential. While our continent boasts of a population of 1.4 billion people and a combined GDP of more than 3.4 trillion, a significant part of the potential remains unfulfilled and will continue to do so if our markets remain divided. Integration is not just a theoretical concept. It is a lifeline to our collective future. By breaking down barriers and creating a single market, we can unlock immense opportunities, create jobs for our youth, and Madam Zuma, I agree with you, so we don't watch them drowning in other waters. We can also, by so doing, lift millions out of poverty.
Meanwhile, Deputy Chief Executive of Pan-African Payment and Settlement Systems, John Bosco, stressed the importance of bridging the gap between economic policies and digital infrastructure.
Many a time, there's a gap between the economic managers who are managing businesses who may not link the economic benefits that we can derive from that technology. For instance, data centers, as you say, how do we, as economic managers, we are looking for statistics to be able to target inflation, to target money supply and stuff like that. How do we now link these two? So that gap is missing. How do we link those two? Secondly, how do we link many other technology things like AI and other things? How do we bridge that gap between the economic benefits that we derive from having a strong technology or a strong digital platform or infrastructure? So governments have invested a lot in Africa in broadband, laying fiber optic, and all that. But
the Chief Executive of the Pan-African Payment and Settlement Systems also added that leveraging economic integration and digital innovation will be key to unlocking Africa's full growth potential. Rosa Calistego's report for Joy Business.
In more business news, the Ministry of Trade, Agribusiness and Industry has expressed its readiness to reset government's agenda to address challenges faced by women and youth in the country. Speaking at the launch of the Ghana National Chamber of Commerce and Industry's Women and Youth Wing, Sector Minister Elizabeth Ofusue-Jare said her outfit would design and formulate a clear, consistent policy to empower women in the industry sector. There is more in this report.
Women in Ghana constitute approximately 44% of micro, small and medium enterprises, particularly in agribusiness, retail trade and light manufacturing. Despite the potential of women and the youth, they are faced with significant challenges hindering their ability to optimize their full economic potential to accelerate growth. To this end, the Ghana National Chamber of Commerce and Industry has introduced the Women and Youth Wing to minimize the pressing needs of women and youth in the industry sector. President of the Ghana National Chamber of Commerce and Industry, Stefan Mason Abbas, articulated the purpose of the establishment of the Women and Youth Wing of the Chamber.
The impact of these challenges, as well as microeconomic challenges on businesses, is often high on women and youth-owned businesses. This situation, ladies and gentlemen, makes it imperative for us to pursue a targeted initiative in helping the women and youth-owned businesses to grow. It is therefore for this reason that we, as a chamber, being the prime advocate of the private sector, have come up with this revolutionary initiative.
Launching the Women and Youth Wing of the Chamber, Minister of Trade, Agribusiness and Industry, Elizabeth Ofusue-Jari, expressed her readiness to collaborate with the private sector to roll out a comprehensive policy framework to empower women in the industry sector.
I commend the Governing Council and management of their foresight and urge them to ensure this initiative is sustained beyond symbolic efforts. The launch of GNCCI Way, dedicated to empowering women and youth entrepreneurs, is timely. This aligns with the government's agenda to foster inclusive growth, job creation, and economic prosperity. This initiative complements efforts by the Ministry of Trade, Agribusiness and Industry to address challenges facing our women and youth. Ladies and gentlemen, it is trite knowledge that macroeconomic stability must be reinforced with investment, productivity, and growth, especially private sector-led growth. In this regard, I pledge to engage constructively with the Chamber and other key business associations and representative bodies in my sector on how best we can support businesses' growth and achieve full capacity utilization to deliver the President's vision and policy of a 24-hour capacity utilization.
And that's our part company here on Business Life. I am Pius Kojo Baka. We have more stories for you when you log on to myjoyonline.com/business. Pleasure serving you.